The crypto market has seen a plunge today, and it would appear that social media users have reacted by calling to buy this dip. Now, according to data from the on-chain analytics firm Santiment, social media mentions of buy the dip have gone up following the latest tumble that the crypto market has experienced. The relevant indicator here is the social volume, which keeps track of the number of unique posts / threads, messages on the various social media platforms that mention a specific topic. The metric counts the posts themselves instead of the mentions, because this method provides more accurate representation of the behavior among social media users as a whole. Presented. Consider two scenarios, one where a large number of mentions are happening over a few posts, and another where mentions are also taking place but are spread out over 30-week systems. A large number of posts. In the first, discussion is limited to a specific group of users, but going by the mentions, this case would have as much interest in the topic as the case, because it's still pretty new part and it's pretty pursued. Because this gabbled, and now to find whether buy the dip is gaining traction among crypto investors, what Santiment has done is filter out the social volume of crypto first, and then certain these posts for the mention of terms related to this idea. Here is a chart that shows the trend in the social volume for this topic over the last month. The graph shows that the crypto social volume for terms related to buy the dip has shot up after this plummet in the market. In the same chart, the capital analytics firm has also attached the social dominance data, which keeps track of what percentage of these discussions are adding up. Social dominance has also registered a spike recently, and at the peak of this spike, it seems the metric assumed a value of about 0.7, which means 0.7% of all discussions related to the crypto sector involve this topic. Crypto has experienced its fastest drop in 4 months as markets have corrected and caused mild trader concerns. Note Santiment, there is a high level of buy the dip calls, which typically means that there is a bit of over-eagerness and FOMO and these low prices. While the market is optimistic about this plunge, too much optimism about things like bottoms has historically actually backfired for the asset's prices. Thus, these mentions aren't a sign that Bitcoin and others have finished with their decline, and more could potentially be on the way. Bitcoin had gone under the $41,000 mark during its initial plunge, but it wasn't long before it made some recovery towards the current price.